Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com on a Tuesday, second day of April. Interesting market today. Again, rates, interest rates driving everything. So again, sign up for the newsletter. I've been writing about this, been talking about this. So rates finally did hit the market a little bit, but nothing really. Let's get right into the charts. Again, give me a thumbs up. All that stuff. Let's get into the charts and really, we had that sell-off this morning that basically was a result of higher rates. We'll get into that. In fact, we shorted rates this morning, and we were long puts coming into today. We did cover those today. We bought, we sold the puts that we had. Essentially, we just came right into this level and drifted all morning after the initial drop, and then closed the day higher, which, again, I was talking to my members this morning, essentially saying, this is going to be the test for the buy the dip. That still is not, you still have to respect the bullish trend. You still have to respect, and we've had these before, and sure enough, I said, if we cannot break below this 52.40 level, then, we're probably going to see a pause or even a rally. There's some levels up top now that could be looked at as aggressive levels. And, one of the also situations is, notice NVIDIA did not break down. And again, I'm of the belief if you can't get these mega caps to break down, even Apple's still on the cusp of breaking down, but NVIDIA did not break down. And so, that you can also point to that to say, well, they're still buying the dip, or there's still not enough selling in that. So that's where we end up. Not a really big change, really. You can call this just a correction, and then maybe we rally back up tomorrow. All going to be predicated on rates. NASDAQ similarly just came down. You really, if you're trying to get all bearish and whatever, I don't know what you're looking at. Because, there's not a lot to, what would get you super bearish, right now? It ain't the charts, that's for sure. Right? So you be careful with that. Also, the Dow has been hit, and that's also pulling back. But again, it was even Bitcoin got hit. Bitcoin is a leading indicator for the market. So maybe if Bitcoin gets hit, maybe that keeps going. Now, the other thing I was also talking to my members is, notice the VIX did jump, but didn't clear 16. If you can't clear 16, you're basically just no change. That's the thing. But again, the culprit was the yields. That's where the yields surpassed the prior highs, which was right there at 435, came up, and we got short right here on the yields. As well, that came in this morning, so we'll see how that goes. But again, if this is yield driven, then if yields come down and break below 430 or even 4%, then the market keeps going higher. That's really what it comes down to. Elsewhere, we've got dollar also pulling back a little bit. All the currencies really not doing a whole heck of a lot. There's really nothing to cover on the currencies. Gold, as everybody knows, we've been talking about this massive rally here in gold. Still huge. You talk about momentum. This is a momentum-driven, market, no question about it. Again, how far it's going to rally, nobody knows. On one hand, but when it does break, it's probably going to break. And I made this statement in the weekend newsletter. This is not sustainable. You can't have gold making new highs every single day and the market's still going higher. That's just incongruent. You can't have that. So we'll see what gives. Something's going to give, right? You can't, when you have two markets doing what they're not supposed to do, eventually something's going to give. So maybe that's coming up. Oil also oil also in the crosshairs here, with it breaking 80, really choppy actually. Oil, it's been just grinding, just choppy, grinding higher. Made a high today of 85 and it pulled back to 84, and it's just been a grinding move higher, kind of quietly, if you will, just moving higher. No levels until you get up into the 90s on that. Other than that, really, it's going to be an interesting, we've got non-farm payrolls on Friday, and we'll see if this is just another garden variety pullback. You come in tomorrow, market's right back up again. I think, as long as the mega caps don't break down and rates can if rates calm down tomorrow, we do have the ISM service index tomorrow. So if that comes in hot, maybe we get another jump in rates. But right now, the jump in rates has been pretty sharp. I mean, if you think about it, the rates have come up almost 25 basis points in literally 3 trading days, which is pretty remarkable. And I think it's the velocity of the rates that is unsettling stocks for the meantime. Okay. All right, everybody. Have a great rest of your week. I'll see you on Friday. Again, if you want to subscribe to the newsletter, give me a thumbs up. Subscribe to the channel. If you need anything from me, seeing what we're doing here, support at transparenttrading solutions.com. Links are below. Have a great week.